What's up, guys? Good morning. How you doing? We are live. We got PPI here this morning, and it came in a little bit light. Market essentially flat. I think expectations for the market are tariffs or nothing here so far. Anything inflation related is getting a little bit looked over unless it has a lot to do with tariffs. So we're through that. Again, that hit at 7:30 Central. Now we have the Fed's Collins speaking currently. Actually, they're done now. A few minutes ago, they finished up. We get the University of Michigan sentiment preliminary read. That hits at 9, so 37 minutes from now. The preliminary number, by the way, for the Michigan sentiment read is the important one. The final is just the revised number, and that doesn't move the market as much because the preliminary is usually pretty accurate, and that's the first look that we get at the new fresh data. The final is just slightly kind of finished up, brushed up, whereas the preliminary is the real first look, usually pretty accurate read. So that's at 9 o'clock, so 30 minutes after the market opens, and then a few Fed speakers, 9, 10, we get 2 Fed speakers. Again, not too worried about it unless we get tariff news, which I'll read you if we get headlines. And at noon, we get a White House press briefing. And that's it. So we are pretty clear from news except for 9 Central. You're going to want to pay attention to 9 Central. That will be, well, I'm going to try to avoid that as far as trading, especially take profit pro accounts. Actually, let me check. I don't know if I don't think I got a warning from them that we can't trade that. Let me take a look. No, so I think, well, no, I think take profit actually seems to be cool with if you want to trade. Don't take my word for it, but I'm not going to just because it's kind of up in the air. So again, 9 o'clock, Michigan sentiment read. That's about it. And then we just have some speakers. Good morning, guys. What's up? How we doing? Jay, Chris, good morning. Scrumptious, Eric, Danny Freedom, what's up? Starbuck, how you doing? Keith, good morning. Jane, Peter. It's all the same people. I recognize everybody here. John, we need PDT for futures. You guys are just trying to get me riled up. I know the wife is trying to trigger you guys. Dap, good morning. Steam, welcome back. What's up, Jude? Chris, Dougie, Curious Skeptic. All you guys, I recognize everybody. It's cool to see everyone popping in every day. Okay, we are 5 minutes out from the open. Is it working? I think I've had my fair share of PDT rants, but I might have another one in me today. We'll see. Nico, how long is the take profit trader discount going to last? So, by the way, you guys should be aware, they're running a 40% deal, but that's actually more expensive than the deal with me. Again, code big is always the best deal. 30% no activation fee. The 40% doesn't do no activation fee, so you still have to pay that when you pass, which sucks. No activation fee actually makes it just you pay what you pay up front, 30% off, and then when you pass, there's no fee to get moving. So it's actually cheaper than a lot of most other props. Well, maybe all other props when you run that deal at take profit. Right now, by the way. When Apex runs like a crazy 90% off, then that flips. But right now, take profit is the way to go if you're looking to save some money. Brandon, good morning. Brian, Jim, how you guys doing? Oh, but Eric, to answer your question, how long is it going to last? Completely brushed over the question. I'm not sure. I don't know when they're ending it. But if they do, I'll let you guys know. All right, Jamie Dimon is making some, again, a JP Morgan CEO, Jamie Dimon, is making some statements here. Talking about trade wars. Not too important here. Trump says we are doing really well on our tariff policy. Collins, back when they were talking about 13 minutes ago, 12 minutes ago, said I would expect inflation well over 3% this year due to tariffs. That right there is pretty much the headline of when they were speaking. They also said US-China tariff hikes are extremely concerning. Might be looking at political statements there. But either way, that's pretty much about it. Again, hey, if you're just joining, keep an eye out. We have University of Michigan sentiment preliminary read hitting at 9. That's about it. And then obviously keep an eye out for random tariff news throughout the day. Mitz, good morning. Welcome back. Do you trade your accounts in groups or all at once? Lately, I've been trading them all at once on stream. At least the 7 Apex that I've been using and the 2 Take Profit Pros. But as the day goes on, I will oftentimes switch to 1 or 2 or 3 accounts that I want to work on and just add a little cherry on top. Or if I, take a couple cuts, then I just walk away and it's no big deal. But to start the day, I usually try to get them all trading. But if you're running, if you have 20, 30, 40, 50 accounts across a whole bunch of different props, I don't think it's a bad idea to trade them in maybe 2 groups. Would I trade them in 7 groups? Probably not, because are there really that many quality trades to go around? Probably not. But a couple groups, sure. Or you can just trade them all at once if you're trading small enough. Again, I think scaling horizontally gives you the freedom to trade small enough to trade them all at once if you would like to. But trading them in groups does protect you from glitches. We had a glitch yesterday. Luckily, we were protected with our stop, and we ended up making a small amount of money on the glitch, like a couple $100. But if you have a glitch where for some reason you're not protected, maybe that's a reason to trade in 2 groups. A lot of things to consider. All right, 30 seconds, 25 seconds out actually here from the opening bell. We'll let the market do its thing here for a couple minutes. Let all these Friday institutional orders clear. And we can move on to trading. So, it's been a while since I've checked in. There's the bell. It's been a while since I've checked in. Are you guys trading evals or funded at this point? I know a lot of you guys were doing evals a couple weeks ago, moved on to funded. How are we looking now? All right, testing the 20 EMA here on the 2-minute to open. Eric funded, John both, Dale funded. Old school eval, skeptic, fresh eval for the day, Mitz evals, Steam, personal account, there you go. Exposed 2 evals, green days, green 2 days, Apex 1 profit take. 2 evals, green, 2 days Apex, 1 profit take. Brian, funded, Doug, evals, all right guys. Kind of a mix here. All right, let's see if we can get a little ascending channel here. That's what we were seeing coming into the open after that dump off. If we can put that in, I'm open to scalping that. Look at this, guys. Look at the range, by the way. The range, we're sitting at 44 off the open here. Now, obviously, that's going to increase because you have to understand about the ATR, right? It's taking the average of the last 10 2-minute bars, at least the way that I have it displayed here. So, and by the way, I still have to fix my settings here. The orange is the last bar, and then it updates on the rollover, whereas previously I had it updating in real time, which is the way I want it to display. I just haven't updated the settings. I had to redo my whole Ninja Trader earlier this week. It was quite the pain, but let's see if we get a comparable range ATR, right, compared to the middle of this week. Fridays are usually a little more timid, not a lot, but we'll see if we end up getting over 100 ATR at one point here this morning. But again, when you're taking the average, you're averaging in those pre-market bars. So really, ATR tends to peak on average at about like 850, maybe 852, when you have the first 10 2-minute bars of the day averaged in after the bell. All right, well, here we are attempting to break that ascending channel we were putting in. heading into the open. Let's see if the bears can take this thing lower. Obviously, I'm watching this wick here. This is a pre-market level, but it is the most obvious level. And there you go, a few stops getting triggered. Not a lot, only a couple point move. So let me give you a look at the 5-minute. So again, this wick coming into the open, I'm watching that. We took out a couple of stops. Again, it wasn't good for a big move, 5, 10, 15, 20 points. We got like 2 or 3 points, maybe, which leads me to believe there weren't a ton of stops down there. We'll see when we get a bigger push through if we do. I'm also watching this like 3, 4 a.m. level because that's the most obvious. We may see some stops down here as well. To start really doing effective stop hunting, we need to give the market, you know, a little bit of time to start putting in highs or lows after the bell. Because those after the bell during market open levels are going to accumulate more stops. Yeah, Zachary, we'll see what the market gives us today. We've been getting a lot of continuation. If we get channel here today, we'll take them. I don't care what we get as long as we get one or the other. What's up, DNA? Welcome back. How you doing? Yeah, we'll see on the how the ATR turns out. If we end up seeing some crazy range of like 100 points, 120 points, then I think what I'll honestly have to do is size down in a few of the accounts and just trade less accounts today. Because when I'm running 40 and 40, for context, I'm talking 40 point stops, 40 point take profits. When I'm running that particular ratio, in 5 of my Apex accounts, I'm only trading a single micro in 5 of the Apex accounts. So in order to widen out, I can't go any lower. So what I'd have to do probably is only trade maybe 4 or 5 of the funded accounts and size those down and then go maybe 60-60 is what I would probably do. But right now the plan is to stick with 40-40 as long as we see reasonable volatility. Yesterday, you know, I really hate to complain about a lot of volatility, and I'm not, because believe me, I'd rather have this than the 11 range that we saw like a week and a half, 2 weeks ago, which was frustrating as all hell. But when you get really high volatility and really bad algo movement, you get some glitches and it just increases the risk. I like volatility, but controlled, less wiki volatility. So we'll see what we get here. You see these big wiki bars, right? Markets trying to figure out what the hell to do here. So you have that 2 minute. Top right of your screen, obviously. That's testing, not breaking. We are also testing, if you look at top left, the 5 minute 20 EMA. Again, not enough for me to just take trades off the 20 EMA alone, but it is a supporting factor and something that, especially on the 5 minute, the market tends to look at least and at least consider when there's nothing else going on, like as far as news, that's something that overpowers it. Headline from a couple of headlines here. One from CNN. The U.S. warned China against retaliating in private talks. Figures. And BlackRock CEO says we're very close, if not in, a recession in a CNBC interview. Those two things aren't going to move things too much here. At least overpower the volatility right now. Okay, there's the test of the 20 on the 2. Let's see if the bulls can break this out. This is really interesting. We're getting a flat channel here off the open. You see this range? It's essentially flat. Now this flat bottom down here, well, we're almost getting a flat top now as well. But these flat bottoms, flat tops, they tend to really tempt breakouts. So I never really essentially trade in favor of a flat bottom or flat top, like buying support at a flat bottom. If anything, I bet against them just because the probability of break, in my experience, is quite a bit higher, of course, on average, big sample size, than like an ascending support level, a descending resistance with 3 or more touch points. In some cases, 2 or more touch points, but you can see your bulls trying to break this out, and you can see the 20 EMA on the 5 minute. Bulls trying to break that out as well. We'll see if they can. All right, here's the back test of the 20 on the 5 minute. Back test of the 20 on the 2 minute would not surprise me either, since we just seen such a range bound morning so far. Here we are into 840 territory. Here's the 2 minute, by the way. We're into 840 territory now, so I'm open to taking setups. Nothing quite yet, but that can change in really 4 minutes. 2 2-minute bars. You see this here? We're right at the break-even point. 0%. You see that? The market lately has been really influenced by the break-even point for whatever reason, more than normal. And there we go. There's the retest of the 20 on the 2. We just talked about breaking downside the 20 on the 5, obviously. Now, a lot of those institutional orders that went through to start the day, causing those wiki bars, are probably getting pretty clear right about now. So we'll see what traders, again, actual traders maybe make up 30% of volume, maybe 25%. Depends on the time of day, obviously. But, you know, institutional orders making up 90, 95% of orders right off the opening bell. Trading that, it's like, do you really have an edge? Because they're looking 3 weeks out, for example. Not necessarily just intraday. Appreciate it, Scooby. Welcome back. Let's try to get it done today. See what we can do. See that the Bears kind of desperate to get that rollover, gaining some momentum. It's not a sequence yet, just a single bar. See that we're really sticking here. That break-even point. We're plus or minus 20 points here. There we are, finally seeing a little bit of a move. Back testing to 20 on the 5. All right, bulls are clearing the wick on the 5 minute. You see this? Pushing into high of day. After the bell, that is. All right, now let's see if the bulls can actually put in some kind of a sequence here, right? Really what we're after. Or a channel, I don't mind. But we're seeing big... Goodness, look up top. See the range on these bars? 165 points. This one here, and this one as well. Middle bar, we saw over 100 point range. Well, close to 100 point range at least. So listen, if you're somebody who's scalping or planning to scalp at least in the next, 15, 30 minutes with like 15, 10 point stops, something to consider. That range is pretty wide. But either way, let's see if the bulls can put in a sequence here. If you guys wouldn't mind, press like on the stream. I appreciate it. Helps out a lot. Roll over here in 20 seconds. You can see the timer bottom right of the chart. Bull's struggling to take it through that wick. There's the rollover. There's the attempt at the push through the wick. We do have now a growing bull bar, previously shrinking, which tells me sellers were stepping in right ahead of that wick, but we finally got a pop through. Took out maybe some stops up through 18.6. Again, just a tier 3 level. Not too big of a deal there. Paying attention up here toward 675. And then 18.7. We have another wick up here, right? A couple of wicks. Really getting an interesting mix here of range on bars. I mean, we've seen less than 50 and over 150 back to back. Point range on a 2-minute bar. That's a pretty big volatility difference. I like the volatility. Again, I'm not going to complain, but I prefer it a little more consistent if it were up to me. But good thing it's not up to me. Gotta trade what we can take. This is good volatility to try to get some tests done, some evals. If you have some laying around. Bigfoot, good morning. Welcome back. Bull's trying to put in a continuation sequence here. Again, I'm watching 670, 675, and 18.7. That's two levels. You know, 675 is the one, and then 18.7. Watching those two. Just pre-market wicks. Now remember, guys, don't forget that University of Michigan sentiment preliminary read forecast 53.5 is hitting in a little under 11 minutes, so pay attention to that. I'm gonna do my best, well, I am, gonna avoid being in something when 9 a.m. hits. That doesn't necessarily drive the rest of the day, but it certainly causes volatility for about a minute, minimum. And the volatility it causes is usually relatively unpredictable. Well, the bulls are taking it higher, but I gotta say, they're failing to put in any crazy strength. A lot of this is the bulls push it higher, and then the sellers kind of step in and wick it back down, and then attempt a reversal and then fail. We'll see if that continues or if one side lays down. My ATR settings. I just overlay the ATR with the range. And it's the ATR with a 10 value on a 2-minute chart. And the range is just the range. Overlaid on the same section of the chart. And there you go, Bear's taking it back down 60 points now within the break-even point on the day. For the market, that is. We're not far. We're within maybe 40 points of the 20 EMA on the 5-minute chart. And within maybe 70 points, 60 points of the 20 on the 2-minute chart. We may end up seeing an ascending channel develop, which I'd be cool with. I'd be very, very fine with that if we can get at least 3 touch points after the bell, which this next one, we might end up seeing that, and aligning with the 20 EMA on the 2-minute chart would be a fantastic thing for me. If we can see a downside test that 20 on the 2, which is what you're looking at right now, and we get a nice follow-through bounce, we might see a little bit more controlled volatility, which I would appreciate. I don't want volatility to go away, but I want it to be less wiki. Less algo-driven, seemingly, and more controlled. And then I can channel scalp. Which would be nice. Now, you know, listen, I'd probably draw this. Again, this is kind of what I'm looking at. We don't really have our 3 touch points yet, but I would probably draw it like this. And listen, the more aggressive a level gets, the less faith I have in it as being like a longer term channel, because these just tend to break the more aggressive, I guess aggressively tilted, you would say, right? That a channel level is. When I'm paying attention to that, Bull's really desperately trying to take this thing above each wick. All right, 6 minutes out from the University of Michigan number. I really want to see a back test of that trend line. ATR currently sitting about 76, maybe 80. And guys, listen, if you're someone who micro scalps with tight stops, don't be afraid on a day like today to lower your size and widen out a little bit. You know, Chris, I don't make, at least not right now, I don't make micro adjustments based on the ATR like hour to hour, minute to minute, day to day. But if that ATR were to end up sitting at like 100, I would probably have to only trade 4 or 5 of the funded accounts and lower the volume. Maybe cut it by half, or at least maybe go to 2/3 of what it currently is, and then widen the ratio out to maybe 60-60, 80-80 if necessary. A good rule of thumb that for a lot of scalpers, by the way, is let's say the ATR is 40, between 40 and 60. In that range, I'm always thinking like, okay, I want to risk about the size of an average bar, if not maybe a little bit less. Okay, so that puts me in, okay, 40 point stops, 40 point take profits if I'm running 1-to-1 initially. And then ATR is 40 to 60, that puts me kind of right in the golden sweet spot for me. Now, I put that on, that strategy, 40-40, with the understanding that, hey, if necessary, I'm not against negative reward to risk and just having a higher win rate. The numbers work. People don't seem to understand that probability and win rate is a factor, not just reward to risk. So everyone goes for 5-to-1 reward to risk. When in the futures market as a scalper, I don't know if that makes the most sense, though it's not the wrong way to do it. Just for me, it doesn't make the most sense. But you guys have seen that with the volatility we've been having, I've been leaving a lot of these trades on to full 40 target. However, there are cases where I might have to take it off at 1 to 2 reward to risk, and I'm fine with that. I bake that in. All right. Last warning. University of Michigan sentiment preliminary read hitting in 25 seconds. Keep an eye out for that. I'll give you the number when I get it. 7 seconds. Forecast is 53.5. There you go. There's some volatility. Don't have it yet. I don't need it instantly because I'm not trading the number. This volatility will probably stick around for a minute or two and then start to fade. $50.8. Eric got it first. All right, so there's the back test of the 20 EMA and the trend line. Now that news volatility gave us a back test, and you know what? I'd prefer to see back tests like this on regular volatility, but I suppose I'll take it on a news event. Yeah, so we came in 3 points under. 53.8 was the forecast. We got 50.8. So that volatility will thin out here soon. All right, bears are going to try to put in some kind of sequence here, riding the momentum from that news, but that news volatility is going to fade, so we'll see if the sellers can stick around, or if the buyers, recognize that and step back in. There's a rollover. There you go, not too bad of a push. Range on these bars is high. We're seeing upwards of 100 points on that last bar. Again, we're getting quite the healthy mix. We're seeing bars double in size. Obviously, that, news bar. Here you go, back test the 20 on the 2. Very common. Also worth mentioning, it is the back test of the trend line. We're getting a lineup there, so we are bound to at least get near that, see what we can do. range on these bars is pretty crazy. $80 points here on this bar. Rolls over in 30 seconds. I'm getting a wick back upside here anyway. Roll over. Buyers are trying to step in here after that volatility off of the news is drying up a little bit. See that wicking up that previous bar, trying to take this bar higher. They are going to run into a retest, by the way, the bulls are, of the 20 on the 5 and the 2, not to mention that trend line that we had tested and put in. Yeah, Zach, if I was going to put that on, I would have preferred probably a minimum 60-60 ratio. 40-40 on that volatility of that sequence had it closed near the low to begin with, which it didn't. 40-40 would have been a little tight. I'd have been risking about half that bar, which is a little bit tight. So, you know, a lot of people wonder, when I don't always, okay, sometimes I will set stops based on price action and wicks, but some people wonder, like, well, are the stops arbitrary or what's going on? They're arbitrary with an emphasis on my entries, the way that I've been trading that you guys have seen. So I'm thinking it through, obviously. I know where the stop's going to be before I'm in. I know where the take profit's going to be before I'm in. The 40-40 is arbitrary, but it's well thought out based on the volatility. And I'm thinking about these things before I hit the sell or the buy button. So it's arbitrary when it goes out, like the points that it goes out, but it's also not. And by the way, setting stops like here, I mean, you guys hopefully have seen this enough by now with just watching the stream. Just like, okay, I'm going to set my stop one tick above this. Sure. You know, it's better maybe than just setting it randomly and not having any idea. But to be honest, like, everybody that does that is the reason that I stop hunt those levels. Because when those get triggered, they get triggered for, you know, 25 points. These in this kind of market, these obvious levels. So if you're gonna set stops only based on that, I think what you should maybe do is increase your average trade duration slightly, which means give it a little more room, look for a little bit more on your take profits, trade a little smaller, and place your stops outside of this obvious range that I'm just going to stop hunt if I get a setup coming into it. I mean, really, guys, how often are you going to get a retest of this wick and then reject right at that flat top? I mean, now you're turning it into a flat top, and flat tops really tempt breaks, especially on the Nasdaq. So a lot of times these stops, even it just takes a few getting triggered, which then triggers more, which then triggers more. It's a ladder effect until you run out of stops. And then everybody who thought they were smart by placing their stop one tick above here just gets liquidated. And by the way, like the stop hunting mentality, it's not like really, it's not like a predatory thing. It's just taking advantage of the liquidity everyone puts out thinking they're smart. If you wanted to really be smart, you would trade smaller and put your stops outside of that range so that even when these guys get stop hunted, you're still, you know, the market really has to move to take you out. The liquidity pushes maybe 10, 20, 25 points, and you're still in the trade. But you have to trade smaller because you're giving it more room, right? All right, let's see if the bulls can push it up through this recent wick. We may see a real-time example here of those stops getting hunted. And by the way, think about it, right? Whose stops are those? The shorts. So what are they? Well, they're buy stop market orders. So when you start triggering them, you just get a whole bunch of market buy orders. That's all the market sees is market buy orders. It doesn't care that they're stop losses, right? And everyone's buying back their shorts. I really think you should enter. I'll commonly say your money's made on the entry. All right, you should enter based on the self-fulfilling prophecies, based on what everybody sees, based on what's so obvious that it might give you a couple percent edge. But I don't think you should necessarily, I think you have to think outside the box when managing your risk, which means not doing what you think everyone else is going to do. Because what everyone else is doing, it just becomes this, like, hey, come give us a test, and then usually you get a couple ticks past this bar, right, past this wick, a few ticks past, now you have that ladder effect, the domino effect of just taking out all those stop losses. I think people teach that, they mean well, but I mean, think about it logically, right? All right, let's see if one side or the other can get some kind of reliable sequence going here with better, more controlled volatility, which we may be starting to get a little bit of early signs. We are just hovering back and forth within like 0.5% of that break-even point, aren't we here? Coming in for a test of the 20. Now, worth mentioning, the 20 on the 5 and the 2 minute are now lining up almost exactly. Here we are testing both right now. So you get here, if you look at the 2 minute, and the 5 minute, I suppose, you get this early fade. Right ahead of this full region, you get this early fade. Now, we have 2 touch points tempting the beginning of what could be a wide descending channel. So if we do end up seeing a push downside through here, it wouldn't necessarily surprise me. It's not enough for me to just say, I'm just gonna get short, because we could see action back and forth, right, of 50 points, 60 points. But there's some stops down here, buy stops, right, of everyone who got long here. And if we take those out, that wouldn't surprise me at all, since we may be seeing the early days of a descending channel here. So let's see if we do see that. That downside wick is at 18,433, by the way. We'll see if those bulls end up getting stopped. Man, range on these bars. Look at this. 131 on that last bar. Guys, if you haven't yet, please press like on the live stream. It really does help. Appreciate it. All right, we got to see one side or the other take the lead here. Well, we're sticking to that 20 on both the 5 and the 2 minute. We're within 30 points of the break-even point. On the day. Market, that is, right? All right, I'll tell you what. I'll be back in 2 minutes. See if the market sets something up between now and then. All right, here we go. Let's see if this turns into something. Obviously looking to see if we can break outside of this little range. Maybe set up some kind of bear continuation. Range on these bars is still really, really high. It's just not that clean. At least the way that I trade. You guys can see we're still kind of sticking around that break-even point. So let's see if we can make a move. Get out of this little range around the break-even point on the day, right? For the market percentage-wise. All right, roll over on this 2-minute coming in 20 seconds. Again, big range here. There's the rollover. Gonna give this a third bar. See if we can get a setup here going. Now, you guys know what I'm looking at, right? You see this low region? If we could get a beauty of a close right down in this region. It's tight. I'm making a very particular ask of the market. But if we could get that, I think I'd throw this guy on. Minute 25 out. I want to see more controlled volatility. All right, 60 seconds out. All right, now stay put. Stay put. Oh, we're taking the stops out too early. There's too much volatility. Come on, Bears. Give it a little bit of a rest here. This bar is getting big. Oh, goodness. 80 points now on this bar. 90 almost on the range on this bar. Wicking back up. Close in 15 seconds here. See that buyer stepping in just after those stops get taken out. 3 seconds till the rollover and we close inside of those wicks. You see that? Look up top. You see that? Close inside of that. Well, there's more wicks over to the left, but right inside of there, you get the idea. That renders my setup invalid. Well, you know, Chris, having the patience is like the bare minimum. But you also have to be willing to hit when the market's giving you a lot. You gotta be willing to keep hitting. And most people do the opposite. Most people hop in randomly. And then when the market's giving them actual edge, they're scared to hit it because they're like, wow, I already took a loser for the day. Or, you know, I'm already green on the day. Can't I just have a good weekend? Or, you know, it's Monday. I don't want to go green to red. Come on, it's Monday. It's like, well, you got to trade someday, right? I mean, really, I think doing those two things, being willing to hit when the iron's hot, and being patient, waiting for your setup, that's the bare minimum out of a trader. At least it should be. I guess it's not for most traders, unfortunately. Well, there's a big old dump off. These range, I mean, that's a 100-point range bar. $20 seconds out from the close here. The range on these bars is really, really wide. There we go, getting a wick back up out of the bulls. Chris, where would you say does one derive that skill set from? He's talking about being willing to be patient and then hit when the market's giving you something. Even if it's over and over again. Simply enough data regarding one's own edge, or is it something one has to learn over time as well? Well, I mean, it's both. The more data you get, the more confident you are that you're doing the right thing, even when you're sitting here doing nothing or when you're taking 6 trades in a row. You know, a lot of people think, well, I should probably be taking a trade once every, 5 or 10 minutes. That's not always the case. Sometimes you'll sit here for 3 hours and get nothing. Other times you'll sit and in the course of 20 minutes, the market will give you 12 trades. That can also happen. So it's not always going to be, like an equal amount of time between trades. It's not going to feel like that. It's going to feel very up and down as far as quantity. But the more data you get, the more confidence you're going to have, and the more you'll be willing to do that. But also just trading more time at the screen is going to be tremendously helpful. Just because you're not in something doesn't mean you're not being productive. I mean, sitting here watching is being more productive than most people. If someone's just taking random trades, meanwhile you're sitting here watching, waiting for your edge to present itself, guess who's being more productive? The person waiting. Christian, good to hear it. Keep up the good work. So you guys see on these big outsized over 100, well, at least 90 plus range bars, the bulls step in. Right, I mean, you're tempting that ATR push just a little too much. You look at the 5-minute chart. We actually got to close back ahead of these wicks. That one we saw right off the open. And you know what, guys? Some of you guys are going to be newer scalpers. Probably a lot of you are going to be newer scalpers. And I don't want you to take this and run with it, okay? Please don't. But take what I'm about to say in the spirit in which it's intended. If you really have a problem sitting and waiting, fine. Maybe instead of just fighting it every day and then giving in, like a lot of you are going to do, what if you just leaned into it and let's say on your average setup you trade 4 micros or something when the edge actually presents itself? Well, maybe when there's no setup presenting itself, I would say it's okay if you want, don't go crazy and kill yourself with 1,000 paper cuts. But if you want, trade 1 micro and treat it as testing. See something on the screen, take it with 1 micro. Don't size up to 4 because you lose 3 trades in a row and say, oh, I'm just going to get it back. Don't do that. Just trade 1 micro. Keep yourself busy. Oh, I think that actually, this setup, I'm going to test that for the next couple of weeks. I think that might have edge. Put it on with 1 micro, let it play out, and write down the reason for entry, your risk management, and the outcome of the trade. That will keep you plenty busy waiting for your actual edge to present itself. Okay, now, again, if you take it and run with it, you're going to sit here and put on trade after trade after trade after trade with 1 micro, and you're going to wipe out all your profit from your edge. Don't do that. But if you want, you can treat it like a testing session with 1 micro. Don't trade bigger than that. There's no reason to do that. Because a lot of these setups, they're not going to work. DNA, thoughts on adding to losers in a structured manner? First of all, that will work best in a personal account. It's not going to work quite as well with the rules in most prop firms. However, I'm totally cool if you want to add to losers in a structured manner. Don't just average in and then never cut your loss. That you're going to blow up. And I don't want to see that happen. But if you have a structured system for adding to losers where you have a point where you cut it, fine. A lot of traders actually trade that way and make a lot of money. Because the futures market is very cyclical intraday. It tends to see the same price multiple times. All right, let's see if we can get some kind of sequence here. We're getting a bit of a flat bottom here on the 2-minute. A little bit. Let's see if the bears can break through that and give me a nice entry. We're seeing volatility start to calm a little bit, which will make it smooth out, which I do like to see in this case. Rufio, I think most people have a problem with being patient. They want to make the money now and buy a Lambo. Yeah, of course they do. And I get it. Listen, I understand. But the reality here is I can sit and tell you that you should do it the right way. You're going to get there faster. But it won't matter because I get it. I'm the same way. You're going to have to go out there and do it yourself and realize, come to the conclusion after a certain amount of time, whether it's 6 months, 12 months, 24 months, that, you know what, I do have to go back and test setups and make sure I actually have an edge. I can't just throw trades on randomly and, you know, get the Lambo money. Like, it's just, trading is hard, okay? So you have to find an edge. And you can just skip that, but I get it. People have to figure it out for themselves. You know, they're not going to listen to just some guy. But it will cost you time. All right, so let's see if the bulls can put something together here, bringing it back up toward the 20. No, I mean, listen, what? No Lambo? You can make a lot more than Lambo money trading futures. I mean, let's just be clear about that. You can make a lot more than Lambo money trading futures, but you won't get to any money if you don't test and find an edge. If you have no edge, you're gambling, straight up. If you have an edge, now you're on the other side of the blackjack table. You're dealing the cards. Yeah, you know what, Chris? When you size up, when you're trading really well with like 1 micro and then you scale up to 3 and then it seems like you always get clipped, that's very common. I think it's a psychological fallacy because when you take a loser with 1, you're like, whatever, on to the next. When you take a loser with 3, you start thinking it in terms of how much did you just wipe out when you were trading with 1. It's very common to size up and then like go on like a small losing streak. It's kind of a psychological fallacy. Just work through it. It's part of scaling. All right, here we are, testing the 20 on the 2. So getting a little bit hung up there. We're also 50 points away from the break-even point on the day as far as the market is concerned, percentage-wise. Range is still high. Range of that last bar is 88 points. Also keep in mind, we're about 50 points away from the 20 EMA on the 5-minute. Rufio, also tough to trade your edge when at any moment news can be released. Listen, if it's scheduled news and you trade it, that's on you. we've all done it. You know, you forget that a news headline's hitting, you're in a trade, you're focused, all of a sudden the news hits, you're like, ah, shit, I forgot it was coming out. We've all done it, but just do your best to avoid that 95%, you know, 99% of the time. But I don't sit around and worry about random news being released. It's out of your control. Just make sure your risk is managed. You're paying attention, right? And that's all you can do. Then just trade your edge. Every once in a while, you'll get in a trade that has edge and boom, Trump says something and it messes with your trade. Fine. Cost of doing business. All right, well, here we are, trying to break through that 20 on the 2-minute top right of your screen, while simultaneously getting closer and closer to that 20 on the 5. They're relevant, not relevant enough to like short off of consistently, at least not in my experience. But the market pays attention. You can see we're getting hesitation on the 2-minute chart. We'll see if we end up getting a fade off that. That could start putting in a descending channel. Yeah, Tron. So we're seeing the average range of a 2-minute bar right now is 83. So a 1-minute bar is going to be about half. Yeah, it's high. Volatility's high. Which is good, by the way. It's just... it's good when it's controlled volatility, which we usually start coming in about this time of day. So hopefully we can get a little bit more controlled volatility, a little bit smaller bars. I really hate to say that because 2 weeks ago, we had an 11-point average on a 2-minute bar, which is also very difficult to trade. You start coming into problems when volatility is too low, but also when it's like really, really high. I mean, it's very high lately based on all the tariff talk. For me, sweet spot's going to be between, 30 and 60. Maybe 30 and 70. Still hanging up at this 20 on the 2. Reminder, guys, Take Profit Trader right now, 30% off, no activation fee. That 25K account is cheaper than Apex right now. Apex, remember, you have to pay the activation fee. So Take Profit, whatever you pay for the test, there's no more charge after that. So you can get in a 25K account for $105 if you use code BIG, all in, which Apex, you can't do that in any of the accounts with the current deal they're running. Don't get me wrong, I love Apex, and they run some great deals, but right now they're 50% off. Yeah, Zachary, you should be able to, yeah. Eric, is there a time limit on the Take Profit Trader eval? No, but if you take more than a month, they charge you the monthly rate. So obviously on all these evals, ideally, you just get them done in the first month. I mean, longer term, let's be real, guys. Again, we talked about this a little bit yesterday, but longer term, you're probably not going to spend weeks and weeks in every single eval and test that you take. There's just too much opportunity cost once you're profitable. But, I mean, yes, in the early days, you should take your time, especially just to get in a funded account or two. But ideally, if you want to save that second month cost, just try to get it done within the first month. All right, Bulls now testing. Look at the 5-minute here. The 20 on the 5, pushing through the 20 on the 2. All right, the ranges on these bars is getting more manageable, which is good. We're coming in 30 points away from the break-even point on the day. for the market. Bears are stepping in on the 20 on the 5. You see that wicked up right to that purplish blue line? Rejected. Bears trying to hold that line. See if they can. Damn straight, Keith. Crypto, that's a good question. I think it's like a 5-day trading week, but just to be safe, maybe you flip a micro here today. Jeremy, take profit allows you to have 5. You can have 5 pro accounts going. And the reason they don't let you have 20, I would assume, is because they allow you to take daily payouts, which is crazy. Obviously, Apex, you have to wait the 8 days, but you can scale to 20 accounts, so it's good to do both. I think using both, you know, like Apex and Take Profit, I think is a great combination. Take Profit, you can take your payouts every day, and then Apex, you can really try to scale up. BC, I have been hiding my P&L behind a post-it note like we talked about, and I've been gaining thousands. Made me realize that I was playing my P&L instead of the chart. I mean, very common. I've used that trick plenty of times for myself in the past. Get some black post-it notes, rip it in half, cover your P&L with the post-it note, don't check underneath it, don't let it be see-through, and just trade good setups. I think you'll be surprised. Keith, nothing yet. I am just waiting for the market to give me something good here. Gotta be patient. Yeah, Jeremy, once you pass the challenge, that's also something different about Take Profit. If you blow a funded account, a pro account, which they call it, they actually do let you reset it. You can pay to reset it. It's not cheap, but you can pay to reset. Which is, you know, I guess makes sense if you're profitable. I'm not exactly sure on the pricing. I think to reset a 25K account is like $450. 150K account I think is $1,500. But again, you can take daily payouts, and you can take payouts on day 1 if you want. So I guess the pricing is fair. I haven't reset any yet, but long term I probably will. I haven't had to reset any yet. All right, good. We are now testing the... I mean, look at this 5-minute chart, guys. You see that? We're really testing that 20 EMA. Let's see if we can get a bull push. The good thing about this is that we're seeing hesitation out of the market around this 20 on the 5, and that's calming down the crazy volatility, which is a good thing for me. So we'll see if we can push through this. If the bulls can put in a nice continuation sequence, then boom, that's a trade for me. We'll see if we can get that. Otherwise, if we end up putting in a little range here, fine. I'll limit order scalp the range. Do what the market tells us. Trick Biscuit, what's up? You're late today. Hope you're having a good day. Yeah, Panther says that 20 EMA on the 5 is aligning with volume weighted average price, so that's going to be an especially important level. Let's see if the bulls can push through. All right, another heads up. We are coming in 15 points, 5 points away. There we are, break-even level on the market. We're really paying attention to these break-even points in the last week on the market. More than normal, that is, by the way. So we'll see if the bulls can push us green, hold us upside. Hey, Lee, good morning. All right, there's 18.5. That's going to be a tier 2 level. So not incredibly crucial, but the market might think about that for a second. All right, bulls finally kind of breaking out. That's good to see. Getting above the 20 on both the 2 and the 5 minute. Pushing through volume weighted average price. See if we can get a sequence going. Pushing through the break-even point. There was a lot in that region. It's all good, Lee. I know what you meant. Sean, are you mostly trading the Asia session? I think Lee's maybe had a couple here this morning, huh? All right, so there was a lot to clear. I mean, again, the 20 EMA, the tier 2 level of 18.5, the break-even point on the day, volume weighted average price. Let's see if the bulls can hold this. Yeah, cool, Sean. I've always had trouble in the Asia session, to be honest with you. It's just a paper cut situation for me. Whenever I've tried to trade Asia, I've just traded very small. I just have trouble. But I know a lot of people, they make their living. Call them pajama traders. They make their living at night in the futures market. Whatever works, man. Wherever you make money, don't let anyone tell you otherwise. And you know, that's the reality of this, by the way. You might be the best trader during New York session, and then in Asia you just can't make a dime, or vice versa. You might make all your money during Asia, and then you try to trade New York and you have no idea what you're looking at. That's the reality of trading. I mean, just trade where you make money. You guys wouldn't mind if you haven't done so yet. I know most of you already have. Please press the like button. Helps out a lot. Appreciate it. That's all I ask. All right, bulls trying to push this thing higher. I really would love to see a sequence here. Otherwise, we end up putting in a channel. Fine. Great. But let's get something developing here. All right, volatility's coming in a little bit. We're seeing less outsized bars, but still holding on to a good amount of volatility. We're starting to look better and better here. This bar rolls over in 90 seconds. Again, this is a 2-minute chart here. Oh yeah, Panther. Hey, that Asia session is trading continuation during Asia is very, very tough because you almost see no follow through. So you're pretty much down to trading within the range, which I mean still is I think is tough during Asia. Within 20 points here, the break-even point on the day for the market. Again, we're kind of sticking to that 0% level. All right, here we are, seeing a back test now of the, back through the break-even point on the day. Also, the 20 EMA on the 2. There's a lot going on right here in this region. Doesn't surprise me that the market's testing this about 1,000,000 times. But I gotta tell you guys, I'm starting to become a little bit interested if we end up seeing this right here hold. This could very easily just break as well. But if this ends up holding, we could be looking at, I mean, this would be a very aggressive ascending opening wedge, but we'll see. If this ends up breaking, then I'm thinking continuation to the bear side. It's a little sloppy, but I wouldn't call that a break quite yet. Again, also that 20 on the 2 is sitting right there. All right, moment of truth here. DNA, it took $600 to 2,000 overnight. MNQ, first run at futures, blew that account the next morning at work, crushing below, learned a hard lesson. Yeah, I mean, listen, futures you can have crazy swings, especially in a personal account. I assume, did you start trading bigger, or was it a 1,000 paper cuts situation that next morning? Still testing here, that trend line and the 20 EMA. I need to see if this channel develops into a real channel, or if we end up seeing downside breaks. Or a downside break, I suppose, with a continuation setup. Again, I don't care, just give me something. There's the attempt at the break. Ten seconds out from the rollover here of this bar. And a little bit of a wick back upside. Need to see a lower close. See that? We close within that wick. Here, see this? Bulls took it just briefly back up inside of this wick. Now, had we seen a close down here, I 1,000% would have sold that rollover. Small detail that changes the whole setup for me personally, the way that I trade, and what I'm really looking for here. It might look like it's being overly picky, but it's not. To me, that's totally different information. Here's the retest of the attempt at a trend line and the 20 EMA. Again, 15 points within that break-even point on the day for the market. Really sticking to that here this morning. Hey, Peter. Welcome back. Good to see you. Yeah, just being patient here, waiting for my edge to show itself. Whether that's in continuation form or channel form, I don't care. Bo, I'm sure you've gone over this previously, but how do you like to set your take profit stop loss? I use just the ATM automation in Ninja. So when I get filled, it goes out. And then I just set it from there. Right now I'm running 1-to-1 on most of my trades, with the understanding that I might sometimes go 1-to-2 reward to risk, which is negative reward to risk, with just a higher win rate, right? But my automated take profit goes out 40 points, automated stop goes out 40 points as well, and I'm thinking about where those are going to be before I'm entering any trade, and it's just automated through the ATM strategy in NinjaTrader. Yeah, so if the 40 to 40 for me, the sweet spot for ATR is going to be somewhere between 40 and like 65 and 70 on the ATR, the range of the bars. If it's much more than that, like ATR is like 90 points, 40 starts to get a little tight, to be honest with you. And if I need to, if ATR is like 15 or 20 or 25, sometimes I might have to size up and tighten down the ratio. So yes, it's a discretionary call based on my experience of the ATR. We are sticking to this 20. There we are, Bulls, trying to take this thing higher. We might see the market put in a little ascending channel here. Let's see if the Bulls can take it higher. Panther, if you're trading 1-to-2, do you set your stop to break even once your take profit hits 1-to-1 to mitigate risk, or do you let the trade ride? Well, to be clear, I'm trading 1-to-2 reward to risk, not risk reward. So that's a negative reward to risk. So no, I don't go break even, especially on prop, just because it ends up, in my experience, chopping out your trailing drawdown. And I think a lot of people, again, it's not wrong to move your stop to break even. It can work very well, okay? But it's a probabilities thing. It's not right or wrong. If someone doesn't move their stop to break even, it doesn't make them worse because somebody else does. It's just, okay, what's the probability now of the trade hitting profit take versus stopping you out? And then what does your average reward to risk look like for someone who doesn't move to break even versus someone who does? It's just slightly different data. It's kind of a fallacy to think that you're protecting yourself moving to break even unless you're going for a huge like 500 point trade, which it probably makes sense to do so then, or to trail it out, right? But just on little scalps, moving to break even a lot of times just leads to a lower win rate. All right, bear is taking this a little bit lower. You can see we have a little bit of a flat bottom putting in right about here. Kind of this region, probably some stops in this region. We'll see if we can get some of those triggering, leading to a push down. We'll see if the Bulls, if the Bears can pull that off. Look at that bull bar. We just get a headline. You can't even see it because NinjaTrader is giving me a glitch. Look at this. There you go. Now NinjaTrader cleaned up. You gotta be careful on these glitches here. I mean, look at that. That's you're getting close to a 200-point bar. Williams came out, he said, tariffs will boost inflation to between 3.5% to 4% this year. Yeah, we're getting a lot of headlines out of the Fed's Williams, so careful here. That's got to probably be the most volatile one. Also, you had the rollover of 10 a.m., obviously. All right, new headline. I expect growth to slow considerably to 1% this year. Yeah, everyone's so negative right now. Jamie Dimon can't help himself. Most of the Fed members seem very against what's going on politically, at least from the headlines that I've seen. But, you know, listen, as we go on and on through the tariff story, you have to understand these headlines start over time to carry less weight. So when everybody's negative all the time, the market tends to stop reacting, at least at some point. Feds Williams, I see the jobless rate rising to between 4.5% to 5% this year. All right, Bear's trying to take this lower now. All right, now this next bar has me very interested if we can put in a continuation bar. Minute 45 out from the close here. Primarily watching that 2-minute chart upper right of your screen. As far as news, again, Feds Williams is still speaking, and then at noon Central Time, we have a White House press briefing. That's about it for the rest of the day here today. All right, 60 seconds out from the close of this 2-minute bar. $25 seconds out here from the close of this 2-minute bar. If we can get a nice, low, controlled close out of this guy, That'll be a setup for me. 15 seconds out. Gotta be picky on the close here, though. 8 seconds. Buyers wicking it back upside here. 5 seconds. Come on, sellers, take it lower. There's the rollover. Nothing. Well, kind of a slow morning here so far, though. I have a feeling that's going to change here. This volatility is starting to clean up. Obviously, that 200-point, 180-point move at 10 a.m. with Williams' headline about tariffs. That's a big move, but aside from there, we're seeing relatively clean volatility now at this point. Zach, I use, so when I sell the rollover, like I was going to do there if I got my setup, which I did not, I would use a limit sell, and I would do so on the offer. If I'm doing true, like true continuation, I use a stop limit to enter. Not that this is not true continuation, but more aggressive continuation, I enter with a stop order. All right, interested here, 15 seconds out from the close. We're seeing a attempt, believe it or not, at a bull reversal sequence. You see those weakening bear bars, right? We'll see if they can hold this up. I'm not so sure yet. Peter, up 750 on 2 accounts. Done with this chop. Good work, Peter. Good work. You can see the bulls here again, like we just talked about, trying to put in this continuation. I'm sorry, this reversion, we'll say, sequence. See if they can hold that up. We might end up seeing a descending channel here. Very possible. Scooby, what are your thoughts on taking a self-mental check before trading? Are you in the right frame of mind with enough rest to try making a trade? First of all, hang on. We are testing the 20 on the 2 minutes. So I'm paying close attention here. Scooby, yes, that should be done. Here's the reality. Most traders, when they have their biggest red days ever, they happen on meaningful days. So a family member may have just gotten sick or unfortunately passed away. A pet may have recently passed away, which can obviously be an incredibly emotional time. Somebody's dealing with a recent breakup. It could be anything. It doesn't even matter what it is. If you are elevated emotionally, coming in, sitting down in the chair, and getting ready to trade, if you know anything that's on your mind that really raises your emotions and puts extra pressure, it could even be because it's your birthday today, whatever. If you're feeling meaningful added pressure to be green today because you think it's gonna make you feel better if you're green, you probably shouldn't trade. Now, if this is happening to you 3 times a week, there's something going on and you should probably get that worked out before you come actually attempt at making a living at this. But a couple times a year, listen, if you sit down and you're like, fuck, I can't do this today. If I'm not green, this is going to be So much worse. Walk away. There's 250 trading days in a year. It's okay. You miss 1% of them, you're cool. It's fine. See, a little bit of hesitation around that 20 EMA on the 2. Alright, we are seeing the early signs of a potential descending channel. Let's see if the bears can actually put this in for us. We have to see this. Ideally, for this to really get put in my eyes, we'd have to see a push down toward this level. Otherwise, if the bulls take it higher, fine, I'll just trade continuation. I'm going to clean up my chart. Keith, Nico, do you ever mess with 0 DTE options contracts? Extremely rare. I never really buy them. If I do, it's going to be coming into some kind of an event, and I'm taking a net sell position, whether it's from an option spread or just a straight up sell. But to see me be a net buyer of 0 DTE options, basically never. It's just too hard. I mean, people want to say, oh, it's rigged in favor of the seller. Well, it is. It is on purpose. That's not a bad thing, by the way. That's how the security operates. The amount of leverage you're getting with a 0 DTE options contract, why would anyone sell that to you unless it's heavily in their favor? So it is. It's heavily in their favor. You have to create a market somehow, right? So the seller gets high probability of success, and the buyer gets incredible leverage. That's the reason there's a market. There has to be two sides. Yes, A-Train, to take advantage of theta, potential IV crush is a huge one, yeah. But usually for net option sell strategies, I'll be somewhere between 2 to 6 weeks out. It's more of a passive thing. I'm not doing that all day. But you still have to manage it. There's really no such thing as passive income. Alright, sellers attempting to take this down. Again, I'm watching to see, okay, do we get continuation or do we end up putting in a descending channel? Either way, I don't care. Let's just get something going here. Because we've had nothing so far today. I think we're going to see that change. Alright, here we are, coming in for a test. You can see what I'm looking at, right? I'd probably draw it. Don't overthink it. That's a very aggressive line. These don't tend to be very sustainable, but they can be respected in the short term. Yes, I'm watching that to see if I can get room in between. Oh, it'd be tight for a continuation downside test. Bulls are wicking it back up anyway. Here comes the rollover. There's the rollover. Put in a doji bar. Big doji bar. Alright, I really want to see this test. Okay, 1:45 until the rollover here. 320. It'd be tight. It would be tight, but it's possible. Minute 10 out from the rollover of this 2 minute. Oh man, it'd be tight. But if we can get just a perfect close on this bar. It's a setup for me, but I'm making a big ask. Bulls wicking this back upside. 43 seconds out from the close here. "22 seconds out, Bulls wicking this back upside. Now here comes the rollover. Nothing. Third doji in a row. Alright, let's make a slight adjustment. I would probably adjust this right about to there. Just draw it how you think everyone would draw it. All right, I'm watching that channel. If we can get an upside test of like 18.4 and the 20 EMA, I want to see it come in controlled, but also the top of that trend line. That's a potential trade here for me. We'll see if we can get that. Big wiki pop. Nothing yet. Nothing yet here. All right, I'll put that on. So I'm sitting short now. 10 points in the money. 15 points in the money, 20 points in the money. Target down at 18,363 and 3/4. Stop loss up at 18,443 and 3/4. 25 points in the money. Let's see if we can get a little bit more of a push downside. We don't even have to clear that previous bar. Yes, this is a little channel short off of the descending resistance point. 30 points in the money. And there we are, out for a winner there. First trade of the day. It's about damn time, isn't it? So we are flat, and that's where we currently sit. 1,500 bucks. Let's see if we can grab something else. Finally got something developing. Yeah, Scott, just watching the 20 EMA line up with that descending resistance trend line with 3+ touch points on the top right of your screen, that 2-minute chart. All right, now let's see if this channel holds. Again, I'm in a situation like this with an aggressive descending channel, I'm less of a fan of buying a descending support. I would rather buy an ascending support and sell a descending resistance, like we just did. Chris, which indicator? The copy trader is from Affordable Indicators, but I'm not using any indicator from them. Yeah, Chris, that's just a feature in their copy trader, a big reason why I decided to try them out. All right, now what we should really do here is make a slight adjustment on this little trend line. And I would now draw it like this. Be a big bull candle up toward there. And you see here, we didn't clear the low of this channel with this pullback here. We actually bounced slightly early. I'd prefer to see a downside test here before taking this a second time. Had we seen this, I would be taking this a second time, but we didn't. We got a little bit of an early bounce, so that tells me the bulls are really trying to do something here. We'll see if they can. All right, let's see if we can get this channel kind of back more where I want it, which is a lower test of this channel. Then maybe we can hit it again on the top side. See the bulls really trying to make something happen here, waking it back upside. And again, you might be saying, well, why didn't you take it again here? We got one big bull bar recovering the full move that we were in on, and we bounced a little early. We didn't really maintain the channel. Maintaining the channel would have been a downside test in this region at least, and then an upside move, ideally on multiple bars. When you get a downside move like this, boom, hit take profit, and then boom, early bounce with a big bar retesting, to me that does seem to lower the probability, which is why I don't take it. I would have loved to take it a second time, but we didn't really get the right setup. And here we are getting the bulls trying to push this out. Keep in mind that 20, the purple line on the 5-minute, top left, that is up in that region. About 20 points away. All right, here we are. Bulls coming in for a test of the 20 EMA on the 5-minute. You see that? Now, as far as news left on the day, obviously anything random as far as tariffs are concerned, we could see. But we have a White House press briefing here at noon. That's noon Central Time. So that's about 90 minutes out. Still testing that 20 EMA here on the 5-minute, trying to clear that while Bull's trying to take it upside here on the 2-minute. There's the rejection and the retest coming in for a retest of that trend line that we saw previously. And the 20 on the 2. There's a lot going on in this region here. And this is 2-minute chart. See what bulls are really trying to break out of that channel and maybe put in a little continuation sequence here. One thing I am watching again is that 20 on the 5. I need to see that get cleared kind of without a shadow of a doubt. We'll see if the bulls can pull that off. In the meantime here, I will be back in 2 minutes. Don't go anywhere. Let me know if something crazy happens. We are back, and we're still testing the 20 on the 5 minute. This market has a lot going on in this region. Can't decide what to do here. Here's an attempt at a push. See if the bulls can take this a little higher. Well, the range has come down, the ATR, to about 60, which is a good place to be sitting. A few more headlines coming from the Fed's Williams. Not too much that's really relevant for us yet. All right, rollover of this 2 minute in 42 seconds. Here's the back test of the 20 on the 5. There's the rollover. Again, still testing that 20 on the 5-minute. One sec. All right, bull's trying to take it higher. Again, I would need to see for continuation here. I would need to see consecutive bull bars with the second either, again, similar in size or slightly growing, but not so outsized where we're tempting a snapback. And closing near the high on the entry bar. If you're just joining us, here's where we sit so far. One trade so far on the day. Kind of a slow morning, to be honest with you. I hate to say that with 1,500 bucks, but it's... That first trade just came not too long ago, and it's been 2 hours into the open. But we're getting a lot cleaner action here. I think we might get something else here. So let's see if we can. Feds Williams, the economy is not having stagflation, but new government policies are having a big impact. Yeah, so news headlines has kind of slowed down, at least till noon Central. White House press briefing at that time. Alright, here we are getting a bull push upside. A minute 25 out from the close here of this bar. I'm going to right into 18.5. Again, that's going to be a tier 2 level. Not to mention here, we're now at the break-even point on the day, okay? Might mess things up for us here. 50 seconds out here from the close of this bar. This break-even point on the day for the Nasdaq has been a huge area of interest again for the last week or so of trading. Kind of an outsized bull bar here, to be honest with you. Pushing upside through that break-even point. But the range here is large, comparatively speaking, right? About a 75-point range. Oh, that'd be a beautiful entry if it was just a little bit more controlled. See that? We're tempting that snapback a little too much. That's just a discretionary call. Now, had these two bars, this first one been a little smaller to give this one room to be a little bit smaller, but still be growing, and we'd closed like in this region, beautiful setup. But here we're just pushing that range a little too hard compared to these recent bars. And boom, you get that snapback temptation, right? The bears are feeling more confident than they usually would on a setup like that to step right in. Gotta be careful. These are just things that you pick up on, by the way, over time. And you're not always gonna get it right. You only need a few % edge, though, to really make a living. Anyone here having issues with payouts from Take Profit Trader? I have not, though it's been taking a little longer than is typical as of late, and I think they're just very backed up from the crazy volatility a lot of people are making and losing a lot of money. So I think that's what's going on. I saw some people were like freaking out about it. I've had no issues, it's just been slightly delayed compared to normal. Yeah, see that? The Bears really taking that snapback opportunity. What's up, Collective? How you doing? Yeah, Skeptic, this has been a kind of a crazy range day. I like range days. Just as far as price action, we've really only gotten the one trade so far. And I mean, I really haven't missed anything. At least anything good. Chris, I apologize if you explained already. Wouldn't the two most recent bull bars be valid for a potential continuation entry? Yeah, so we just went over that. The reason that I said that was it would be a beautiful entry if both of those were similar in size compared to each other, but smaller overall. Because when you get that outsized move compared to the recent volatility, this is a discretionary call, by the way, by me. You're really seeing a push. Oh, you get a beautiful close right at the high, but you're really making a big temptation for the Bears to step in and get that snapback based on the ATR overextension, I should say, or over whatever expansion. So I did not take that for that reason. Now, had this bar been smaller to set up this bar to still grow, but still be smaller and close like in this region, beautiful. I buy the rollover. But here you're just really tempting that snapback from the Bears. And they did. They stepped right in and said, we feel confident selling here because look at that outsized bar. Boom. Take it lower. Discretionary decision. Now let's see if the Bulls can put something in for us to take. I need a controlled, either range would be great, but it's looking more like if we can get a controlled, nice little continuation sequence, that opens me up. Debo, pass the eval. Good work. Do you think it's a smart idea to counter trade the snapback? I have a setup that counter trades looking for the snapback. It's called hang on one second here. It's called the Rubber Band Reaper setup, and it does exactly that. Though I gotta say, the Rubber Band Reaper, it's a little bit more involved. You really have to adjust it based on the ATR daily. So I wouldn't say it's like a beginner setup at all. I'd say it's more of an advanced setup. And honestly, probably not the best one to start with. Here's a look at all the charts. You can see that today on, I mean, look at the daily. This is just showing the New York session. Look at the daily. This volatility has really come in. Absolutely a range day so far today. I mean, comparatively speaking, right? And our one trade, by the way, if you're just joining us, this is where we currently sit. Just one trade in. It's been a little bit of a slow morning as far as the market giving us setups. But our one trade, where was it here? Here. Channel scalp, right? Which is normal for a big old range day. I'm gonna clean this up, by the way. Do you trade with extended session or just regular hours time frame? So on my 2-minute and 5-minute charts, I put up Globex, just all of it. On the daily, I prefer to just look at the New York session, though behind me, I put all of it so that I have context of what's going on overnight. When I walk in the morning, I can look and just see what happened. Because without looking at Globex at all, you really have no context of what the hell happened overnight, which lately has obviously been important. Thoughts on gold? A lot of people make a lot of money trading gold. Just pick an instrument that you like and run with it. All right, here we are testing that recent high. Chris, I am currently using, this is the copier. This is by Affordable Indicators. I have no affiliation. There's no code for this. I like it though. It shows, something that a lot of copiers overlook is it shows the collective P&L across the accounts you've traded. So there's no more sitting with a calculator every time, which obviously works well for this as well. V Gibbs, hey, are you still doing the Market Mastery program? Yes, I take on very few people though. You have to be like a perfect fit. So we can, you can submit information and we can talk, but I don't take on a lot of people at all. Okay, so really attempting to push through these recent highs. Let's see if the bulls can put something controlled in here. And you look at the 5-minute chart, and it's a flat top. Look at the 2-minute, we also have a flat top. These really tend to tempt breakout. Obviously, we've seen a few points of break. Market holding off of this flat top, though. I gotta tell you, I think we do see some stops get taken out. We've already seen a few, but I don't think all that liquidity has been hit quite yet. See if the market can push this a little bit higher through that last bar's wick. Chris, is it better than Replicanto? He's talking about the Affordable Indicators copier. As far as the copy trading function, it's very similar. What I've noticed is that affordable indicators, they have better risk management tools with equivalent, if not maybe slightly cleaner copy trader setup. So yeah, maybe slightly in my opinion. But I like Replicanto a lot. But I'm still testing this one again. I haven't made a final decision though. It's looking pretty clear. Debo, loving the short recap vids you upload after the stream. Good. Good, I hope they're educational. Listen, when I do upload those, which isn't necessarily every day, but when I do, it fills you guys in on the entire day. If I do trade after the stream. Which sometimes I will, sometimes I don't. Depends on the price action. Okay, let's see if we get a little ascending wedge here. I mean, you guys know, if you've been watching for even a couple days, you probably know what I'm watching, what I'm looking at here, right? Flat top. See if we can get that to break. Very common little pattern here. This is very aggressive, by the way, to the upside. That bottom trend line, but that's really what I'm watching. Now, these tend to snap up in a big way, so we'll see if we get a break. Chris, no, I do not. I will not short a flat top. If anything, if I was going to take a trade here on the flat top at all, I'd be betting against the flat top holding. Meaning betting in favor of a break. Again, flat tops, flat bottoms break with higher probability, in my experience, compared to like an ascending support or a descending resistance. They're just, like this flat top, it's just so obvious. It just tempts a test way too hard. Now, when I say higher probability, again, I'm talking like a few percent. We're not talking 98%. It's a common misconception a lot of newer traders have. Yes, Chris. So you can see here we have our 2 touch points. There's not a lot of room to get a third, but we'll see if we do get a third here on a consecutive bull bar. I'm sorry, a consecutive bar after that bull bar. I would still count this as a second touch point, that is, on the ascending support level. Good, if you guys haven't yet, please, if you're a little bit newer here, press like on the stream. That's all I ask. Helps out tremendously. How much does Take Profit Trader cost? Well, it depends on what account size you go for. The 25K, code BIG gives you 30% off, and no activation fee, which is important. 0 activation fee. You just pay what you pay up front, and then you pass, and there's nothing else to pay. But the 25K account, once you use the code, is 105. Just click the link in the chat. You can look at all the prices. Well, here we are getting another test of this flat top. Let's see if the bulls can push this through. Look at how tight this is getting. This is going to snap up in a big way. It's just tough to predict which way. Now, there is here there is a slightly higher probability that it breaks upside. But again, it's not enough for me personally to just get long here. But just so you're aware of the context of the situation, that is the reality here. Slightly higher probability that we see an upside break, given like 1,000 of these setups. Big sample size. And here we are, the bulls trying to push through the top. There you go, there's the attempt at the recent wick. There you go, bulls pushing through. Now let's see if they can hold it. What did we just talk about? You know, it's almost like the probabilities maybe mean something, huh? Test your setups, find your edge. That's all you gotta do. And then just execute. See if the bulls can hold this. And then we can start cleaning up that chart. Here we are. The retest, very common to see. Here comes the rollover of the bar. See if the bulls can clear that previous wick. Again, here on a breakout like that, now I'm thinking, okay, let's see if the bulls can put in some kind of continuation sequence. That's really what's going on in my head right now. That's exactly right, Chris. Yep. We can back down for a test of the flat top. Seller's not quite willing to give it up yet. Well, there's a close near the high of that bar. What you see here, inside of that previous wick. That tells us a lot, right? We gotta see if the bulls can push through and break down those sellers. I'm gonna clean this up a little bit and leave that flat top on for context. Come back in for a retest. Again, very common to see these retests of flat breaks. There it is, the retest. Listen, guys, if you are new here, I see we have some new viewers here. Please subscribe to the channel. I'm live every single day the market's open, 8:15 a.m. Central. If you need some accounts, for context, I'm currently trading funded Apex accounts. You can see here, here's where we sit. That's one trade today so far. Funded Apex accounts and Take Profit Pro accounts. Take Profit Pro, the code, by the way, for both is BIG, B-I-G. Take Profit Pro is 30% off with no activation fee. The deal at Apex, still with the code BIG, is 50% off and single day pass, which means you can pass the evaluation in 1 day. So they both have their benefits. Best way to go, I think, is trading both long term. Obviously, you got to pick one to start, though. Take Profit, daily payouts once funded. Apex does not have that, but you can get funded more quickly at Apex. Again, as far as deals compared to others, code BIG at both always gives you the best deal. So honestly, a little bit of a slow morning. One trade here so far today. We are sitting up $1,500 to round out the week. So you know what? I'm cool with that. I'm going to see, you guys know what I'm watching, right? I'm looking for little channel setups, if we can get them. Continuation setups, if we can get them. And that's it, guys. Listen, I'll see you Monday, 8:15 a.m. Central Time. Again, if you haven't yet, please subscribe to the channel, and I'll see you then. All right, guys, enjoy your weekend. Rest up. We got work to do. Come next week. I'll see you soon.